Who's in control? The bulls or
the bears?
Depends on what you're looking at. The technicals, charts, or the macro data. Lots to talk about today, so sit back, grab your cup of coffee, and let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you find this video of value, looking for a different opinion, please do hit subscribe, the bell, the like buttons, all those things we all ask for all the time. And thank you so much. Over 500 subs in just the last month. So today's agenda: big charts, treasuries, what's our signals, what keeps me up at night, talk about those fundamentals, what's on my radar, and game plan going forward. Let's go to the big charts. All right, first up, what do we have here? New chart. We've heard a lot about, is this a bull or bear market? So first off, let's determine. I'm going back here to the 20s, and what you can see is a secular bear market, then a bull market, right? Pretty well defined, right? From 2000 and 2015 was in fact a secular bear market. Yes, we had ups, yes, we had downs, okay? But we went sideways for 15 years, okay? Now, we are in fact in a secular bull market right now. But even within these secular bulls, you can have pullbacks and contractions like we had last year in the fourth quarter and all these bumps along the way. So the question is, where do we go from here? Next, let's go and zoom into a daily chart. So when we zoom in, what do we see? Obviously, right, we were stuck in this box. We kind of went nowhere for quite some time. Up, down, sideways. Kind of has been our pattern since last September. But, right, now we're starting to break out here. We'll see what happens, right? Got this little cluster this week with some stuff. But clearly, that is a upward pattern. So short term, that is very much positive as I look at things. You know, and here's kind of a longer view, and this puts things into perspective. Why? This has been my most difficult year of setting expectations, right? When you look at where we are, okay, last year there's a high, and then we had another series of highs. All of that is good, but how far have we gone? Not as far as you think. I'll explain that in a second. Next up, weekly view, kind of our midterm view. But before we talk about it, I recently did a video on market terms. I'll put a link up here, and it is very helpful to better understand. So what's happened? Well, clearly, that is a breakout. That's a bullish breakout, okay? I'll look for confirmation next week, but you can't deny that. And then we're turning up over here as well on momentum. So short term and midterm are now positive, which is a big change. So next we have our long-term view on the monthly chart, okay? We go back some time. If you're new, let me talk about this again, okay? When you see this line going down, this is what we call relative strength of the market. So clearly that's going down, and you have the market going up. That's negative divergence, okay? Big time, okay? There's your relative strength, and we keep going up. So if I look at anything right now on the charts that concern me, long term, it's still the fact that we have big negative divergence. So we do look good down here. This one is PMO, which is price momentum oscillator. That's ready to turn over. We've had a turn here. So I'm going to say neutral. That was negative, okay, because we're not like jumping up big time. So I want to make sure we have confirmation before we go further. Now, the other thing is what lies below. Now, as we look at this, this is new highs minus new lows. Black line is your S&P. the histogram is new highs, new lows for the overall New York Stock Exchange, okay? Now, today it's 272, which is a big number, okay? Prior to that, yesterday was 132, and you can kind of see this cluster not particularly good. So we're still not seeing this major surge, because when you go back over here, you know, we definitely were hitting 400 or 500 type new highs that day. So looks good today, but overall has been somewhat anemic, okay? So that is still a concern of mine. Also, if you want information about our services, we'll have a link here. This is what we do every day for clients. I'm not selling books, not on TV. This is what I do. This all started for our clients, and it has grown. So next up, let's take a look at the bonds. All right, so this has been a big story because we've seen a change, right? We've been talking about this yield curve, and it's been showing recession. That has actually gone away. So what's happened this week? Well, it's very interesting, okay? You can see we are pushing down pretty hard. Why? The Fed. Okay, so the Fed came out this week as we expected, as we said last video. They're not going to be dovish enough. Okay, what that means is, in this case, they said they're no longer going to be cutting rates as we go forward. So that has really pushed yields down, and we'll talk about our holdings in a second. So you have to look at this. The bond market is always smarter than the stock market. So now the bond market is screaming something, and obviously the stock market is telling you something else. So we'll continue to watch this, but, okay, I think we go a little bit lower here on the Treasury, which is helping our bonds and bond proxies. So next up, what keeps me up at night? So what keeps me up at night? Short-term performance anxiety disorder. STPAD. Just started that. No, I didn't. I actually stole it from somebody. Let me explain what I mean. So when I started going through the charts, I talked about the S&P. Why? Because that's most well known. But the S&P is not just the market. There's so many other opportunities out there that you can take advantage of, okay? Because when you look at the picture long term, it really changes. So what I did was, this is a performance chart, okay? Indexes only, going back to September 25th, 2018. That was our high before the downturn last year in the fourth quarter. Okay, S&P 4.1, large value 3.02, gold 25, utilities 21, 22 for REITs, consumer staples, and then home construction, strong. So where would you rather be, right? 100% here, or maybe diversify a little bit? And when I say diversify, not small cap, mid cap, other sectors. This is how you hopefully can bring alpha being returned. So let me look at the shorter term view, okay? Because that, remember, we've gone sideways. Well, the S&P up 1, large value barely even moved, but you still have gold, utilities, REITs, staples, okay, home construction that have done very well. So we are in large cap growth, large cap value, but we're also here, okay, while the market has gone sideways, it's allowed us to grind higher. Past performance is not guaranteed future results, but this is where taking advantage of the whole market can help you over time. Okay, so earnings, what have we seen so far? Fact is, when you look at things, right, we're at 0.22%. That's 347 companies. Actually, a little bit better. We're looking at projected minus 4%. Still have a lot of companies to go. But you do have energy materials, 13 and 26. Infotech down here, down 5.57. So kind of muddled, but not particularly great in some areas. So what does this look like, right, from a fundamental standpoint? Now, I don't have 15, but I have 16. Now, we had some big negative numbers, minus 19, minus 20, but it's all about the red, right? That's where we are now. So as of today, it looks more like 15, 16 with a muddled earnings picture, but the market's going higher. That, of course, is the big thing. So next, which no one is really talking that much about, especially in big TV and the press, right, is this repo deal. So if you're new to this, I'm going to be quick, okay? We'll have an article below. Fed restarts, debt purchases, just don't call QE. Okay, this is all about this repo deal, okay? The Fed was starting to reduce their balance sheet, right? Everyone knows that. After QE, quantitative easing. That means they're flooding the market with liquidity. Big companies, banks, right? They go in and are able to pull that money. It hit a zero and a negative in September. So they did 15 billion, 20 billion, 60 billion. Now they're doing 120 billion a day. I don't care what you call it. This is quantitative easing. And every time they go out at night, it's oversubscribed. This is an issue, okay? We have to continue to watch this. I think more should be talked about this. We just got our GDP number down to 1.9, projected coming up. Not particularly great. JOLTS, we had a good jobs report today. JOLTS is job openings and labor turnover. Very interesting to see that go down, not as many jobs, okay? And here's another thing, personal savings. You would say, hey, that's great. People are starting to save more, right? We're clicking back up, but they're saving more. They're not spending more, okay? China, oh my gosh. Who's tired of talking about China? Raise your hand, okay? I know I showed this a couple weeks ago, but where are we in the cycle, right? No progress made. Administration is tough. Sell off. You know, every time we get a tweet, I don't know why the market buys into these tweets saying we're close to a deal. It's silly. So let me tell you about China. I've got a book I'm reading right now. I'll talk about it next video. China Manufacturing Pmi, okay? Ugly. Ugly. There it is right there, okay? Now, China, okay, their own reporting, the Caixin China manufacturing number came out last night, and it's the highest in 3 years. See this? Highest. Wait, how do those numbers not match up? Because they lie. That's what they do, okay? You can't trust China numbers. When you look at the China deal, don't have time to show it, look at the China charts. Market has continued to go down, right, in Shanghai. Why? Because they don't believe a deal's coming. All right, getting you in. Let's zip through this. First up, healthcare. I have been talking about this for how long? One thing you have to have in this job is patience. Okay, I kept saying I was waiting. Look at that, right? Sometimes patient investors get rewarded. That is a true breakout. We continue up 0.86 today, which is beautiful. That is a good looking chart. You're getting a little pricey up here. Probably see a pause coming up and an opportunity to get in. Healthcare has been one of the better sectors as it pertains to earnings. So how about crude oil? Why would you look at oil? I spoke about this over here with Saudi, saying it's not a good time to get into. But what do I see, right? This is a reverse head and shoulders. Why I put that in there. I like oil right now. We're starting to see inflation, no matter what the Fed says, tick up. Look at the CRB index, commodity index, natural gas, all starting to go up. And this was an opportunity starting to tiptoe into this one as we go forward. And then gold. We always get questions about gold. It's been one of our top holdings here, and it's gone sideways for a while. But okay, let's see if I can draw this with this program. No, that didn't work out too well. It's not calibrated right. All right, ready? There it is, there it is, there it is. Not quite. But we had a breakout in gold this week. Why? Treasuries go down, gold goes up. Good way to follow. We have held our position. We haven't gotten out of it. Like gold going forward, what else do we see? Relative strength pointing up, right? This is oversold 70. A lot of places to go there, and a positive crossover on momentum, okay? So next up, fear and greed. All right, wrapping things up, fear and greed. First up, well, that's wrong. 75, which means extreme greed. Of course, right? When you look at where we are today, I think we're overbought. Could see a pause or a pullback, especially with some of the fundamental data especially when the market wakes up and realizes the Fed is done cutting for a while. Indicators, short-term, mid-term positive, neutral on the long-term signal. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.